Hey, this is Johnny Barrett with Barrett Consulting. We serve electrical business owners with accounting and consulting solutions. I have prepared this video for you. I titled it Driving in the Dark, Electrical Business Owners Financial Reviews Shed Light. And the whole reason why this topic came to mind is just through some conversations that I've had with electrical business owners over the past week or two, as well as conversations with clients during financial reviews that we've done recently. And so I wanted to bring this to you, and I framed the conversation with a story that I wanted to share with you. So when I was younger, I had the opportunity to spend a few months in Anchorage, Alaska. And in Anchorage, there are days with with daylight as much as 20 hours out of the day. It's light during the summertime. So it's pretty amazing. Uh, so I went to bed a lot of times when it was still light outside. And then when I woke up, even if it was early in the morning, is already light outside. Pretty crazy. But because of that, when the summer was kind of winding down, my brother came up to visit me, and we went on a camping trip. And w with the way it worked out, we left at nighttime and it was dark, and I hadn't driven in the dark for several months, and so driving in the dark was strange. I wasn't used to it, and I just kind of had this feeling that of discomfort. Like my eyes just couldn't see very well, and it was just such a contrast to what I had been used to. So I had this kind of distinct feeling of driving in the dark and the contrast of what it was like driving during the daytime. And so I wanted to frame the conversation today around this idea of driving in the dark versus driving in the light and being able to see so much more clearly. So I have this picture of, driving a truck down at nighttime versus this one driving in the clear day. Um, with finances as business owners, um, being able to clearly see what's going on in the business and see it on a frequent basis can really just make the biggest difference. So it's just a contrast between these two pictures kind of illustrates that a little bit. Moving back to Utah, I got used to driving at nighttime again, and it was a pretty quick transition. But I always think about that, like what a big difference it was driving at nighttime after I wasn't used to it up in Anchorage, Alaska. So the quote of the week is, if you are implementing change, don't go it alone. Your chances of success are 7 times greater if you employ peer support. And this is from 12-week yearbook. I love this quote, and in the book they talk about um, the cycle of change, and there's a lot of ups and downs when we're changing things. Us humans are resistant to change, um, and so there were some studies done in this book. They talk about people who were given diagnosis of major health problem diagnoses where if they didn't change their habits and behaviors, then they were on a path towards death. And they did a study where if someone had peer support versus not having peer support, they were 7 times more likely with that peer support to actually implement those lifestyle changes so that they could extend their life. And so I love this quote. If you're implementing change, whether that's in your business or personal life, don't go it alone. Have someone there with you to support you, ideally somebody who's going through something similar, so that you can have that be 7 times more likely to have success. That's an amazing outcome. Okay, so diving into it, we're talking about financial review, and I wanted to first start out with the why. Like, why is it important to um, review your finances consistently, which I recommend on a monthly basis here at our firm. We recommend that our clients at least check things once a month, maybe quarterly, do once a quarter, do a more in-depth review, but at least monthly. look at the stats and see how things are going. And a couple of things that have brought this to mind to me is I've been working with one client who, this year has been doing pretty well. Last year, there was, um, they were running their business at a loss. And they've made some changes to their business. And as we were going through the financials and looking at, okay, you know, your profit or loss based on like a percentage of revenue last year, it was in the negative, whereas this year it's in the positive. So we kind of ended on that note, and there had been this turnaround in their business. They had made some changes, and to see the light bulb turn on for the client and being able to see that it took accounting, which sometimes is a little bit of an intangible thing, and it made it more tangible for that client. So that was a good meeting that we had. Another client experience that I had was we were reviewing some finances, and for this particular client, there ha there hasn't been a ton of growth in terms of revenue recently. Um, and I asked him about that, like, does that kind of surprise you, or is that kind of what you're expecting? And the client responded saying, well, yeah, at this point in time, I'm not concerned with increasing the revenue. What I've been focusing on this past little while is really just our process improvement. Um, Basically, they're just setting up their system and making it more robust, so that they can add on revenue in the future without overburdening things. And so, um, again, that was a good opportunity for them to reflect on, for me to come to understand, their focus and what they're working on. Again, taking something that's, just numbers on a page, and it becoming a story, and illustrating, changes that have been made, and how that affects the financial performance, but also not only the finances, but how have operations changed, and what improvements have there been. And lastly, I've been consistently reviewing my finances every month, because I need to be the example for my clients. And it's really been helpful. It's insightful every month, and I look at things more often than that, as I'm sure most business owners do. There's certain things to look at, but throughout the month as well. But on a monthly basis, I sit down and look. I'm making goals, and checking my goals against the actual performance, and it really is like driving in the broad daylight and being able to see things a lot more clearly than if I only looked at that once a year or something. So that's the why. Um, Now I wanted to give you some practical things, as far as because you, as a business owner, you wear all those different hats all the time. So finance is just one of those hats, and you probably don't want to take the time to look up a million things and do tons of research on what to look at. So I can just share this with you of a few of the items that I look at every month when preparing, and also when going over financial information with my clients. So one is accounts receivable. So accounts receivable, obviously, that's your billing, right? So your customer invoices and payments for those invoices. So on accounts receivable, it's important to ensure that everything is accurate. So first of all, invoice dates are important. So ideally, you want to have an invoice date when the work is completed, so that it shows on your financial statements, on your profit and loss. It will show the income was earned in the period that it actually was earned. So in the month that it was earned. And so I recommend that you really pay attention and be intentional of when your invoice dates are. If you're doing a project that spans several months, it may be worthwhile to have separate invoices, so that, when the first 50% of the work is done, that revenue shows up in that month. Whereas over the next 2 months, if you're doing, 25% the next month and 25% of the work the following month, you can get those that income showing in the proper month. Okay, beyond that, with accounts receivable, it has to do with customer payments. So um, you just want to make sure that no payments are duplicated and that payments are recorded and applied to the invoice. By doing that, you'll have accounts receivable that is accurate. So when you're looking on the balance sheet and seeing accounts receivable at the end of this month compared to the prior month, you can see whether it's gone up or down, and you can have confidence that that number is right. The next part is accounts payable. I recommend for clients, especially if you're um, larger operations and you have um, you use suppliers and you have an account with a supplier where balances are unpaid, then having your accounts payable up to date is important. So you have all the bills entered. So you're going to show as of the end of the month how much money you owe to your respective suppliers and to any other vendor. So that's an important one. And then credit card balances. Just make sure that your credit card statement has been reconciled in your bookkeeping software and bank balances as well, that all the transactions have been entered properly again. So these first three items, accounts receivable, accounts payable, credit card balances, and bank balances, that's kind of the flow of once all those things are in their right place and in their right order, um, then we know that the revenue numbers are going to be correct. Your profit and loss statement is going to be accurate because all of those other things that feed in and affect your profit and loss, they're going to be in the right place. That's where we'll go into and review our profit and loss. We'll look at the revenue. Was the revenue target hit? Was it more or less than last month? Is that what we expected? And those kinds of things. And then we can look down to the future to see, okay, what jobs do we have lined up? How is next month going to be revenue wise? Um, Another thing on the profit and loss is that I look at for my clients when we're reviewing the finances is cost of goods sold, which is obviously made up of primarily your um, parts and your labor. And so by going through and reviewing cost of goods sold, if that percentage is jumping wildly, then that's something to look at. Um, if you look over a wide period of time, like a year, and you see that percentage of your cost of goods sold compared to revenue is stable, then that can really help you plan for things and also know if you're bidding and invoicing at a rate that makes sense for your company for your profit objectives. And I wanted to mention that I did make a whole video on benchmarking and ratios. So I'll share that on the next slide. But if you go to this video, and you skip forward to about minute 5, you'll see where I take a publicly traded company that does electrical work, and I go through their statement because they've published that. It's a public uh, document, so anyone can access it. And I went through quite a bit about their finances and their ratios, so you can use that as a resource to compare your company to. And it's this video. It's called "Is Your Business Worth More Now? Benchmark Performance." It's about a 12-minute video. And again, at minute 5 or so, I go into a little bit of a deep dive on that. So check it out. Um, that's mostly what I wanted to go over today. And again, kind of coming back to this why is that by doing this kind of a review and making sure that everything is in its right place and spending the time to review your profit and loss, your and the business performance, the direction that things are going, is your credit card balance increasing a bunch, and your bank balancing going down? That would be a concern. Is your accounts receivable just ballooning because you've done all this work, but you haven't been spending enough time on collections, and so payments aren't coming in the door? Um, have you um, kind of paid up on all your suppliers and you don't owe accounts payable, or has that ballooned? So by reviewing these things, you can really keep a good sense of what's going on from month to month, and it can really inform your business decisions. And so, a couple questions to pose to you. First, what does your financial review process look like currently? We all do this in one way or another. At the minimum, you have a tax preparer, or you submit information for your taxes at least once a year. So at least there's some kind of financial process going on, and it could be that you're on the completely other spectrum where you have an in-house accountant and you have a tax accountant, or anywhere in between. So what does your, and just having that team in place doesn't necessarily mean that you have a review process in place. And so, what does your financial review process look like? Are you just checking bank balances here and there and have a tax preparer do your compile your information at the end of the year? Or do you have kind of a formal thing where you look through your finances? And then, second question, can you enlist an accountability partner today so this gets done more consistently? Kind of coming back to this, like if you're implementing a change, if you want to change something about the financial operations of your business, don't go it alone. Your chances of success will be 7 times greater if you employ peer support. And so, if you already have a bookkeeper in place, it could be that you set up, hey, you contact them and say, hey, you know what, let's do, a more formal review, or whatever it may be. Whether you have a business partner, a spouse, you can set something up so it's a routine of, hey, on this day of the month, we'll go through the finances together, and you'll be much more likely to actually implement it by having somebody else involved. And so I have a challenge for you to go ahead and evaluate last month's financials, and implement a process to review those financials going forward each month. Um, and then the second thing is to identify a couple specific financial goals for the next 1 to 3 months that you want to hit, and write those down. Hey, I hope you liked this video. Hope it's useful to you, and that it gave you a couple ideas of what to do in a financial review. Again, go back and check that other video that I made about benchmarking and financial ratios. We really dove into the financials, so you can kind of again compare that to your own company. And hey, if you need some help, if I'd be happy to talk to you about your accounting and your financial situation, and see if we can help. Hope you have a great day, and talk later. Bye.